So yeah, as you can see guys, we just had a beautiful spike here, just like I analyzed, or just like I said.
They thought I would fall, but I'm never falling. Please don't call my phone, don't you ever think of calling. Catching these pips like daily, making money easy. Catching these pips like daily.
Hey, what's good YouTube? It's your boy Weisenheimer, and I'm back with another video. Romans 8 verse 31, it says, if God is for us, then who can be against us? That's the verse of the day that I have for you today, guys. So remember, we're living in times where like everybody or a lot of people out there can be able to judge us on whatsoever that we're doing. People would come to you and tell you that you'll never make it in Forex. People will come and tell you that, why are you doing this? You should be going to work and stuff like that. You understand? So you just have to keep it in mind that since God is for us, nobody can be against us. Whatsoever that they can say, just don't take it to the heart. Just keep it to the mind, and just like with time, let it just vanish. You understand? Thing is, like, I'm talking it from experience. Like, as an upcoming trader, I had a lot of people like who were telling me that I'd never make it. A lot of people told me that I should just let go of this thing and just focus on some other things. But now the very same people who used to tell me that are the very same people who are coming to me asking for help. The very same people who are telling me that they are so proud of me. The very same people who tell me that they knew that I was going to be here some days. What I'm trying to say is that don't let anything that people will come and talk to you just go into your heart and just disturb you on, or just disturb your movement and stuff like that. Just like focus on yourself and keep it in mind that God is for us. So as it is just like that, nobody can be against us, right? So that's just how it is. So whilst watching, please make it sure that you do like this video, you share with your friends, and if you're new to the channel, please make it sure that you do subscribe, you turn on the notifications so that you get notified when I drop another video, and do check my previous videos to gain some knowledge. So for those who have been asking me which brokers do I use, I made it sure that I link them in my description. So just click the description box down below and you'll get all the information that you need. You'll get the brokers that I use, and obviously you'll also get access to my new WhatsApp number that I'm currently using, so you can be able to communicate with me, whether it's business or any other things that you'd like to communicate with me. So on today's video, I decided that I'm going to be analyzing, or I'm going to be showing you guys a couple of tricks that you can use to trade boom and crash, because obviously those are the most easiest pair to trade in the financial markets. So whether you're going to be trading spikes or you're going to be trading against the spikes, that's what I'm going to be covering today. So please do make it sure that you watch this video and don't skip anything until it ends, so that you don't miss any valuable information. So let's just keep guys. So right now we are on the boom 1000 index 1 hour time frame. So basically right here, when you trade boom 1000 index or crash 1000 index, there are a couple of things that you have to focus on. So obviously, if you want to be swinging, or if you want to trade against the spikes, you can use bigger time frames. That's why you'll be able to identify your chat patterns and some other things. But if you want to trade using spikes, then you can just switch to smaller time frames, because that's where you can be able to identify the previous levels and everything. But then bigger time frames are the way to go. So with everything that you're gonna be doing, or whether you're trading spikes or trading against the spikes, I best believe that it's gonna be more advantageous if you're gonna be using a bigger time frame. So on synthetic indices, I normally prefer the 1 hour time frame and going down. So basically on the 1 hour time frame, it's the same procedures, guys. Nothing has changed. Obviously, if you can be able to highlight your previous market lows, I best believe that they give you spikes and they give you like long-term trades. For an example, if you are able to highlight this market low here, obviously you'd be able to catch this buy here and move with the market as it moved all the way to the upside. If you are able to do what, to mark this low here, obviously you'd be able to do what, to catch this buy here. So that's just how it is, guys. What happens on the left hand side with boom 1000 affects everything that happens on the right hand side. So let's just dive deep and see what is it that I'm actually talking about. So first thing first, we highlight all the market lows and obviously the market highs. So but for now, I'm just focusing on the market lows. another market low. So with the market highs, I'm just gonna use something different. So I'm just gonna use this one. I'll just fill it. Let me check what color can I use. Let me use this one. Done right here. So this is how it is with the market highs. All right. That's just how it is with the market highs. So with Boom 1000, because it's spiking to the upside, or it's spiking, or it favors the bulls when it's spiking, I prefer that you trade the spikes. I don't like trading against the spikes. So because spikes most of the time they are so accurate. If you highlight a level and the market never respect that levels with a spike, then you do know that maybe after 2 or 3 candlesticks closing below that zone, you just close, because it won't spike anytime soon until it reaches another strong level, right? So let's just switch to this right here. So right now I'm looking at long-term buys right here on Boom 1000 index. I'm looking at long-term buys. So you can just buy the Boom 1000 index there and move it all the way to the upside as it's moving to the upside. So if you can switch to a bit of a lower time frame, even right here, there are ways that you can obviously use to identify whether the market is going to be buying or the market is going to be selling. As you can see that this has been a strong market level, a strong zone, market rejected, market rejected, market rejected, and there's a high chance that the market might still reject here. So if you want to be swinging this, obviously now it's going to spike anytime soon. So if it spikes, then obviously you know that you have your first candlestick closing above your zone. Then you're going to be having a second candlestick closing above your zone. Then when a third candlestick forms, that's where you're obviously going to execute and swing trade. If that's only if you want to swing trade. So it's the same approach, guys, that we're using on currencies, same approach that we're using on synthetic indices, Nasdaq 100 and stuff like that. So with Boom 1000 index, you can also use what? You can also use trend lines to get what? To get your retest and everything, stuff like that. For an example, right here, let's check if what I'm saying would make sense here. Exactly. So you see that the markets did what? The markets obviously gave us the first turning point, gave us another turning point here, gave us a beautiful third touch. It was obviously respected, because why am I saying so? The first candlestick to touch here closed below, the second candlestick closed below. When the third candlestick formed, that's where you're supposed to sell and move with the market as it moves all the way to the downside. Remember what I said? I said that if you are you have entered a trade and you don't know where to put your stop loss, just put it, if you are selling, put it below the previous candlesticks. If you are buying, just put it above the previous candlesticks. Sorry about that. So okay, cool. Now we want this. So as you can see here as well, after the market gave us a beautiful double bottom here, the first candlestick closed where below, but the second candlestick closed above. So now if this also comes back to our previous respected structure, which is coming back to closing side, then we're going to consider this and we're going to buy here and move it all as it moves to the upside. So with me right here, after the spike, I would have closed. Why? Simply because this was supposed to be my take profit around here, because it's it's moving on a diagonal resistant form, or in a diagonal resistance territory. So right now the markets came back, and obviously after this it gave us a beautiful retest of structure here. So you can see that after it touched, it just spiked all the way to the upside. So obviously we start counting here. First candlestick closed above, second candlestick closed above, and on the third candlestick closed formed. That's where we're supposed to do what we were supposed to buy and move it all the way to the upside. So as you can see that after buying, it decided to give us a beautiful chart pattern here. Beautiful chart pattern. gave us a beautiful chat pattern. So now after this chat pattern, you know what to do. On the third touch, that's where you do what? That's where you execute. So the market gave us the first touch, second touch, and on the third touch occurred, that's where you're supposed to do what? That's where you're supposed to buy and move with the market as it moves all the way to the upside. So the market gave us an immediate breakout for that moment. It shot all the way up, but as time went on, it just decided to give us a beautiful reversal. Then after the reversal, it gave us a beautiful retest of structure. So first candlestick closed below, but second candlestick closed above. Same scenario that happened here. Then we're supposed to do what? To execute there and move with the markets as it was moving to the upside. So now as the market was moving to the upside, it gave us another form of a chart pattern right there. Or it gave us a market correction right there. So this one doesn't even matter, so I can just consider this one. So you know, we had our first touch, second touch, then on the third touch, that's where we do what? That's where we execute, or that's where we enter. Then now the market just decided to give us a beautiful extension all the way to the downside. So all these things that I've taught you previously, they also work on what? On Boom 1000. You just have to find a way of how to implement them. Then obviously after that, you will get to see the results. So right now the markets might give us an impulse, then come back to do what? To respect if it happens that the markets are coming back to retest, it might happen after a spike, then the market might just come here and to retest on our diagonal support. Then after that, the market can just shoot all the way to the downside. But however, at this point in time, I'm just waiting for the markets to give me a beautiful spike around this area. Because we had a lot of market rejections here. So this serves as a very strong zone in the markets. So I'm expecting a spike around here. So yeah, as you can see, guys, we just had a beautiful spike here, just like I analyzed, or just like I said right here. So yeah, it's just that easy. You just have to put in the work. You just have to practice. Yeah, that's just how it is. And I'm hoping that it will further push all the way to the upside. Peace.
Thought I would fall, but I'm never falling. Please don't call my phone, don't you ever think of calling. Catching these pips like daily, making money easy.